Hello, everybody. Steven Sitkowski here. Welcome to this week's edition of Market Insights. Let's take a look at what's going on in the financial markets. Hope all of you had a great week. It is January. You know what? I'm a day ahead. It's January 22nd. How about that? So why don't we straighten that out? Yeah. Time moves fast enough without me losing a day. Anyway, hope you guys are doing awesome. Market's doing well. Quick reminder, this presentation is for educational purposes only and not intended as investment advice. I'm simply sharing some of my thoughts with you based on 40 years of experience of doing this. So what's moving the markets? Well, the S&P 500 has hit an all-time high. Da, 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 da. So we've been waiting for this to crawl above 4,800. And it has, whether it sticks or not, we'll be watching. Leading economic indicators declined slightly in December. It's been going down, I think, 19 consecutive months, but this was the smallest decline. So that's good news, maybe a change in trend. NVIDIA keeps marching toward 600. The 10-year Treasury now sits at 4.084, has come down a little bit, and oil getting a bit stronger, $74.70 per barrel. What to watch this week? Well, the only thing out today was the LEI. Nothing tomorrow. Wednesday, we've got the services PMI and the manufacturing PMI. Basically, that's a state of the economy. On Thursday, got the fourth quarter GDP initial number coming out. It's expected to be 1.7%. We have our initial jobless claims. They're forecasting 200,000. It was 187,000 last week. New home sales. And then Friday, personal income, personal spending, PCE, personal consumption expenditures. That's a big one as far as the Fed's concerned. So there'll be all eyes on that. So tune into some financial news. Last week's heat map, look at NVIDIA rolling. Broadcom on NVIDIA's coattails rolling. NVIDIA up 8.5%, Broadcom almost 10, Apple almost 5. The laggards were utilities because interest rates moved up a bit, and oil because it just hasn't gotten out of its own way. I think oil's going to have a good year this year. Mark my words. 1 year heat map led by NVIDIA. They get the crown, 253%, but a lot of other very strong performers. Broadcom over 100%, Alphabet about 60, Meta nearly 200%, Costco 51, Lilly almost 80. Spent a lot of money made in the last year. I hope you were part of that. Market breadth. One of the things I like to look at are new 52-week highs versus 52-week lows. And we had 180 of those on the NYSE, new highs, 125 new lows. On the NASDAQ, not as bullish, 300 highs, 421 or 31 new lows. Finding returns in the market for the last 5 years, it is tech by a mile. Hopefully you were loaded up. I mean, why did tech do so well? It's because it's where all the growth is. It's pretty simple. Investors chase earnings. Biggest factors for 2024, according to B of A survey, the Fed. Personally, I think the Fed is foregone conclusion. We know what they're going to do. They're going to pause and then they're going to cut. I think the market's going to be driven by corporate earnings, which is what it should be driven by. Consumer sentiment is on the rise. It's nice. People are feeling better about things. M2, this is our money supply, is at 21 trillion. And I want you to know that the stock market doesn't go up without an expansion of money supply. That's just how it works. Without an expansion of M2, the market would be where it was in 1929. So you think the market's driven by American ingenuity? No, it's driven by the fact that between the Fed and the Treasury, we just keep pumping out more dollars. That money goes into the economy, shows up on corporate balance sheets and in the stock market. This is heartbreaking. Over the last 5 years, did you know that 401k balances have only gone up $1,200? That's 1%. 1%. Market's been doing great over the last 5 years. That's because most of this money is sitting in mutual funds, which are crap. Too heavy fees. Here's good omen. I mentioned the SP hit an all-time high. So over the next year, positive returns happen 74% of the time, 3 years, 87, 5 years, 83. And look at the average returns over those periods. We are now sitting on 8 trillion in cash. That's money on the sidelines available to go into equities. Happy to report most Americans now own stocks, 58%. Terrific. But most of it, 92.5%, is held by the wealthiest 10%. So the rich just get richer. My suggestion, do what rich people do. Election year returns. Well, for the Russell 2000, on average, it goes up 16%, S&P 9%. Consider small caps in your portfolio. Stock symbol for that is IWM, like Mary. Investors feeling pretty good about things on the greed side. Although investors are a bit less bullish this week than last week. Last week, 48.6% bullish. This week, 40%. Fed probabilities, as I've told you they would, have dropped. They were saying that rates were going to get cut in March. I told you, no way. The CME probabilities, these are supposed to be people that know, were at 80%. It's now been cut in half to 40%. I don't expect to see a rate cut until the summer. And this week, we got plenty of earnings. That could be moving the markets. We have GE coming out Tuesday morning. Raytheon, now they just call themselves RTX. Netflix in the afternoon. AT&T on Wednesday. IBM, Tesla on Wednesday. Thursday, Intel, Visa, Capital One, Friday, American Express. So lots of earnings. Could be market movers. And these are the 1 year returns by sector. Technology up 55%, communications 45%, discretionary 28%, industrials 14%. Financials and healthcare and staples haven't done a lot. Same with materials and REITs, and energy and utilities, the big losers. Check the charts, see what's going on. Let's use the S&P 500, see SPX. So chart looks great. Look at that 50-day moving average sloping up. We are well above the 50-day moving average. Clearly the trend is higher, hence a new all-time high. How about the Qs? So this is big tech. Okay. Looking nice. And finally, IWM. It's the Russell 2000, small cap. Bounced off its 50-day, and it looks like it is headed higher. So, all good, my friends. I'll be back with you again next week. Be watching for that. And until then, stay blessed and bye for now.